rising interest rates are leading to a softening in the property market, and how much people can borrow is flowing into prices. Angus Moore, economist at REA Group, joins me now. Angus, how are you? And so much is being said about house prices. What's your take?
Good morning, Tim. Thanks so much for having me. Yeah, look, it's set to be a reasonably busy weekend. So, despite the interest rate rises and a lot of the talk, for a winter weekend, things look to be reasonably busy. Now, that for a winter weekend is important. Winter is typically quiet. Volumes are down from earlier in the year. But for this time of year, things are staying quite busy, as they have for much of this year. That really has been the theme. We had an extremely busy start to the year, and that's kind of flowing into what we're seeing in winter. But if we're looking more broadly, we certainly have seen conditions cool a bit. Measures of buyer demand have come off, particularly from where they were in sort of spring last year or very early this year. It's taking a little bit longer to sell homes now than it was earlier in the year, which is another sign that things are cooling. And as you say, we're starting to see prices fall in many parts of the country. So the PropTrack Home Price Index showed that prices in June were down 0.25% nationally. We saw price falls in Sydney and Melbourne, and notably, we saw price falls in Brisbane. And that's the first time since the pandemic that prices have fallen in Brisbane. So there's a lot of things driving that, but a really big part of it is the fact that interest rates are rising as quickly as they are.
This is all in the context that we've seen massive growth over 2 years.
Yeah, exactly right. Prices are up something like 35% from the start of the pandemic to where they peaked. So even with a few months of prices falling, and we're expecting we'll continue to see prices fall for at least this year as the effect of interest rates flows through. But even with that, we've got a long way up from where we were pre-pandemic.
And we're also in winter, so we may not see those prices dramatically go off the cliff, because generally springtime is where a lot of people will put their properties on the market, and there's aspiration, better weather, everything that goes with it.
Yeah, that's exactly right. Winter's typically a quieter time in property markets, basically right around the country, before things start to ramp up when the weather gets a bit better in spring, and we see a lot of people come to market in kind of September, October.
Is it dangerous what the Reserve Bank is doing, Angus? Look, it may be needed, but with so much talk, particularly to everyday Australians, that interest rates won't rise, and many people push their limits because they thought, well, this was going to be the case, and then boom, they get smashed with interest rate rises, along with cost of living pressures, which have been unexpected as well.
Yeah, we've certainly seen a brisk pace of increases from the Reserve Bank. So they raised interest rates another 50 basis points this week in a fairly widely expected move. Most people were expecting that, and the governor had kind of telegraphed that was what was going to happen. That's on top of 50 basis points the month before and 25 the month before that, which is a very brisk pace. In fact, it's pretty rare for the RBA to raise by 50 basis points in a single meeting, let alone two in a row. You have to go back to kind of early 2000 to find the last time the RBA raised by 50 basis points. And to find something comparable to 250 basis points in a row, you have to go back to 1994 when they raised by a full percent in one meeting. I think it's fair to say in those 3 decades, the way that monetary policy operates and how the Reserve Bank conducts itself has changed quite a lot. So it's maybe not as comparable. So it is quite an unusually brisk pace of interest rate rises, particularly in the context of the governor's comments earlier in the year that he didn't think interest rates would rise until 2023. And certainly at the time, that was my expectation. And what's changed is inflation. We've seen it pick up very quickly, and the RBA has had to respond to that as a result.
Now, we had the results from the census a week and a half ago. What did it say about the housing market?
Yeah, census week's always fun for data nerds like myself. There's an absolute wealth of interesting insight there. 2 things really stood out in what we saw last week. The first is that home ownership rates were basically flat over the past 5 years. So between the 2016 and 2021 census, the proportion of people that own their home basically held steady. And that's actually quite pleasing, because we've been seeing home ownership rates trend down for much of the past 2 decades or longer, depending on how you measure. So while it's maybe not cause for celebration, I think it is good news that it didn't decline further. The other thing that stuck out to me, and it is related, is that we've built a lot of homes in the past 5 years. So the census is not just a census of people, it's a census of dwellings as well. And the number of occupied homes on census night grew 12% between 2016 and 2021. And that's a really brisk pace. It's about 2.5% a year if you annualize it. To put that in context, between 2006 and 2011, the total number of homes grew 3%. And between 2011 and 2016, it grew 7%. So the past 5 years has seen more new homes than the previous decade combined. And that's pretty pleasing because we talk a lot about how solving affordability has to come down to building more homes. And so the fact that we're starting to see that is, I think, a good sign. And we're seeing that in a way that we really didn't for much of the prior 2 decades.
Good to finish with some positive news, my friend. Have a great weekend.
Thanks, Tim. You too.